America is shocked because the phone company it tried to shut down is beating Apple on Apple's own turf. For years, the United States treated Huawei as too dangerous to sell American chips to. Today, Huawei outsells the iPhone across China, the largest phone market on Earth, with over 1.4 billion people. In the second quarter this year, Huawei's shipments grew nearly 20%, while most of the industry shrank. You heard that right. Huawei grew, while the whole Chinese market fell over 4%. And that is just the beginning, because growth was never the hardest part. Surviving the ban meant to end this company entirely was. That story deserves a quick like and subscribe so you don't miss the next one. By the end, you will understand how a company written off in Washington became untouchable in Beijing. So what did Apple build in China that made it so hard to dislodge? To understand how remarkable Huawei's rise really is, you first have to understand how completely Apple earned its place in China. This was not luck. It was 2 decades of precision execution. Engineers loved the iPhone because Apple controlled every layer of it, the chip, the software, and the glass, fused into one seamless machine. Manufacturers loved it because Apple anchored entire cities around its supply chain, pouring billions into facilities that turned rural regions into manufacturing powerhouses overnight. Governments loved it because Apple's presence meant jobs, tax revenue, and a halo of prestige that told the world a region had arrived. Picture a single factory campus in Zhengzhou, so large it once employed more than 200,000 workers at once, roughly the population of a mid-sized American city, all inside one industrial park. That is the scale Apple built at, quietly, for years, while the world just saw a phone in a box. And the loyalty it earned was just as staggering. Independent surveys have repeatedly found that more than 9 out of 10 iPhone owners plan to buy another iPhone as their next phone, a retention rate most car companies would consider a fantasy. Anchor that number the way an engineer would. 9 out of 10 is the kind of repeat business a restaurant chain spends a fortune chasing and rarely reaches. Apple reached it with a $1,000 piece of glass and aluminum, in a country where hundreds of cheaper, capable alternatives sat on the very same shelf. Here is the part that most people get wrong. They assume Apple's dominance in China was about the phone itself. It was really about something almost nobody outside the industry ever thinks about. Apple had made itself the operating standard for what premium technology was supposed to feel like. A locked drawer that only opens with one specific key. That is what the iPhone's tightly sealed ecosystem was. Elegant, secure, and nearly impossible for a rival to replicate from the outside. So why did it take this long for a real challenger to emerge? Because building an alternative to that kind of vertical control does not happen with marketing. It happens with a decade of engineering nobody sees, funded through years of losses nobody wants to talk about. Apple had built something close to unbreakable. That was the wall standing in front of every Chinese rival. But even the most brilliant systems carry a weakness nobody wants to name out loud, and this one was about to matter more than anyone expected. For all of that brilliance, Apple's dominance in China rested on a foundation it did not fully control. This is not about a company making a strategic mistake. It is about a business built almost entirely on components, software licenses, and manufacturing partners that lived outside its own walls. Apple designed the iPhone, but it never built the chip factories, never owned the rare earth processing, and never controlled the operating layer that sat underneath its rivals in the same market. Consider the math. Apple's premium pricing meant the average iPhone sold in China cost roughly 3 to 4 times what a capable domestic alternative did, a gap wide enough that a single percentage point of patriotic buying could move millions of units. And consider the second figure. Chinese consumers were, by some surveys, willing to pay a measurable premium specifically for domestically engineered technology. a preference gap large enough to reshape an entire market's center of gravity within a few product cycles. That is not a rounding error. That is the size of a mid-sized country's entire smartphone demand, shifting on preference alone. And there was a third exposure, quieter but just as serious. Every iPhone sold in China depended on a chip supply chain running through Taiwan and the Netherlands, a route that made Apple's most important market also its most geopolitically sensitive one. If that pipeline ever tightened for any competitor, Apple's advantage would not come from owning the technology. It would come from simply being the only company still allowed to use it. That is a rented advantage, not an owned one, and rented advantages have a habit of expiring the moment someone builds their own house. Here is the detail that puts everything into perspective. None of this mattered while no credible domestic rival existed at the premium tier. Apple's flaw was invisible, specifically because nobody could yet exploit it. Every strength Apple built, the vertical integration, the loyalty, the premium price, only worked because the alternative on the shelf next to it was always a step behind. A locked door means nothing if no one has built a key. But somewhere in a research facility that most consumers had never heard of, a company written off by the world's most powerful semiconductor restrictions was working on exactly that key, piece by piece, chip layer by chip layer. In 2023, Huawei began answering that question with data that was harder to dismiss than anything the field had seen before. The key came from an unlikely partnership between Huawei's chip design arm, HiSilicon, and a domestic foundry most consumers had never heard of, the Semiconductor Manufacturing International Corporation, known simply as SMIC, based in Shanghai. The core idea sounds almost too simple once you hear it. If the outside world would not sell you the most advanced chip-making tools, you had to squeeze more performance out of the tools you were still allowed to keep. Previous attempts at an advanced Chinese chip had stalled by leaping straight for the cutting edge, chasing the extreme ultraviolet lithography machines Western foundries relied on, built by exactly one company on Earth and now blocked from export to China. That approach failed for a simple reason. You cannot buy your way around a tool nobody will sell you. So, HiSilicon and SMIC tried something closer to a chef working without their favorite knife, refining an older technique instead of waiting on a new one. Think of it like baking the same recipe twice, adjusting the oven temperature and timing on the second attempt until the loaf that once failed came out perfectly risen, using nothing but the equipment already in the kitchen. That is essentially what SMIC's second-generation process, known as N+2, did with existing deep ultraviolet tools, layering and refining the manufacturing steps until the chip performed at a level nobody outside China thought was still possible without the newest machines. Here is what makes this incredibly exciting. The resulting chip, the Kirin 9000S, measured just over 100 square millimeters, barely larger than a postage stamp, yet it packed the equivalent processing sophistication of chips built 2 full technology generations ahead of what most analysts believed was achievable under the restrictions. The die grew only 2% in size compared to its predecessor, a change so small most engineers called it remarkable restraint rather than a workaround. What changed was not the size, it was that the entire chip, from design to manufacturing, happened on Chinese soil for the first time on a device this advanced. Engineers reportedly spent years running the same production line hundreds of times, adjusting exposure and etching steps by fractions of a second. Patient repetition that never makes headlines until the day it does. That patience is the part most coverage skips. It happened without a single new machine crossing the border. The question was no longer whether China's semiconductor industry could survive without foreign tools. The question was how far it could go from here. A working chip in a lab is one thing. A working chip in tens of millions of pockets is something else entirely. Let's be honest about the limitation first, because the story only works if we are. The Kirin 9000S, built without extreme ultraviolet lithography, runs meaningfully less efficient than the newest chips from TSMC's most advanced production lines, drawing more power to hit similar performance and producing more heat per calculation. A gap-independent lab testing placed it somewhere between 1 and 2 full chip generations. But here is what that number actually means in practice. For the overwhelming majority of daily phone use, texting, browsing, streaming video, taking photos, that generational gap is functionally invisible because most smartphone tasks stopped requiring cutting-edge processing power years ago. Picture two runners finishing a 5-kilometer race 2 minutes apart. On a marathon course, that difference would matter enormously. On a walk to the corner store, nobody notices. Now for the unexpected advantage, the part almost nobody predicted. Huawei paired the domestic chip with proprietary satellite connectivity, letting the phone place calls and send messages in areas with zero conventional cell coverage, a feature Apple would not match in China for more than a year afterward. Here is what most people get wrong about chip races. They assume the winner is whoever builds the fastest silicon. But the non-obvious application that mattered most in 2023 was reliability in China's remote western provinces and disaster zones, regions where losing signal could mean losing contact entirely, and where a domestically produced, sanction-proof supply chain suddenly became more valuable than an extra 10% of raw processing speed. Manufacturing independence, it turned out, was itself a feature, not a footnote. There was a second unexpected advantage buried in the same phone. Battery efficiency in real-world use, measured across a full day of mixed activity, came in competitive with flagship rivals, despite the less efficient chip, because Huawei's engineers compensated with aggressive software-level power management. Most competitors had not bothered to optimize as tightly. That is the kind of trade a specialist mechanic makes, accepting a slightly thirstier engine in exchange for a smarter transmission that squeezes more distance out of every gallon. None of this erases the honest gap in raw computational power. A professional video editor or a hardcore mobile gamer would likely still notice the difference in demanding tasks, and reviewers who ran synthetic benchmark suites documented it clearly, with scores trailing top competitors by a double-digit percentage in the most intensive tests. That gap is real, and pretending otherwise would insult the very engineering this video is trying to explain honestly. The question was no longer whether the Kirin chip worked. The question was whether the rest of the world was ready to watch it scale. The lab numbers were one thing. What happened on the sales floor in Shenzhen, Chengdu, and Beijing over the following 2 years was another thing entirely. By the second quarter of this year, Huawei's smartphone shipments across China had grown nearly 20% year over year, according to independent tracking from IDC, even as the broader Chinese smartphone market contracted by more than 4% over the same period, its 5th consecutive quarterly decline. The field matched the forecast. That single sentence matters more than it sounds, because in the semiconductor industry, laboratory promises fail to translate into store shelves constantly, and the gap between a demo and a shipping product is where most breakthroughs quietly die. Field validation carries more weight than lab results here, specifically because manufacturing at national scale exposes every flaw a controlled lab environment can hide, from yield rates to thermal consistency across millions of individual units. Huawei's manufacturing compatibility detail mattered enormously too. Because the Kirin chip used SMIC's existing deep ultraviolet tooling, rather than requiring entirely new equipment, factories could scale production without the years-long retooling delay that usually follows a chip architecture change. If this 20% growth number surprised you, the next part is going to be even harder to believe. Hit subscribe so you're there when we cover it. Publicly archived shipment data from Counterpoint Research and IDC both of which post their historical tracking methodology openly for industry review, confirmed the pattern held across multiple independent measurement firms, not just one favorable source. One semiconductor industry analyst summarized it this way: the export restrictions were designed to freeze China's most advanced chipmaker in place, and instead, they may have taught it how to build without permission. It started with one application: satellite connectivity in regions where losing signal mattered more than losing a few points of raw processing speed. Then it spread outward from there, into flagship phones, into everyday shoppers who had never cared about chip architecture in their lives. Retailers in Shenzhen reported lines forming before store openings for the Mate 70 launch in late 2023, the kind of scene not seen for a domestic phone brand in years, with some outlets selling through initial allocations within hours. By the following year's Mate 80 series, single-model activation numbers had climbed past 1.5 million units, making it the best-selling flagship-tier phone of its kind that season, ahead of comparable premium models from every other domestic competitor combined. The claim now had receipts, and once the receipts were public, they were impossible for the rest of the industry to ignore. More than 7,000 international patent families now cite Chinese domestic semiconductor manufacturing techniques tied to this generation of advanced node research, filed across offices in China, Europe, and beyond. These are not academic citations. These are legal and financial commitments. When an engineering team files a patent, they are not writing a paper. They are staking a claim on technology they intend to build products around for the next decade. SMIC responded by announcing expanded capital expenditure, specifically earmarked for advanced node capacity, publicly disclosed in its investor filings, while HiSilicon reportedly resumed hiring hundreds of additional chip design engineers across its Shenzhen and Shanghai offices. Qualcomm and MediaTek, the two dominant suppliers of mobile chips outside China, both acknowledged the shift in earnings calls, noting increased competitive pressure in the mid-tier Chinese smartphone segment, where Huawei's newly restored self-sufficiency had begun eating into share once considered safely theirs. Xiaomi and Vivo, two of Huawei's largest domestic rivals, each accelerated their own investment in proprietary chip design partnerships, rather than relying purely on imported silicon, a defensive move that would have seemed unnecessary just 3 years earlier. On the regulatory side, Beijing's broader industrial policy pushed towards semiconductor self-sufficiency, backed by hundreds of billions of dollars in state-directed investment funds, provided exactly the kind of sustained capital runway. This sort of manufacturing breakthrough needs to move from one flagship phone into an entire domestic industry. Here is the detail that puts the economics in plain terms. In any market where a domestically produced alternative closes even half the performance gap at a meaningfully lower cost and zero exposure to export restrictions, a 19% efficiency advantage is not a trend. It is a competitive pressure no serious company in that supply chain can afford to ignore. Independent researchers have continued publishing open teardown data on each new Kirin generation, with firms like Tech Insights making their methodology and measurements publicly available for the entire industry to verify rather than take on faith. That transparency is precisely what turned a single phone launch into a verified industrial trend, rather than a marketing claim nobody could check. Even the United States Commerce Department weighed in publicly, arguing the chip still trailed American technology by years, a statement that, whatever you made of it, confirmed the achievement was significant enough to demand an official response at all. Nobody holds a press conference about a competitor's failure. That global scramble, the patents, the capital, the hiring, was still only describing what had already happened. What came next was the harder question of whether any of this could scale to the size the industry now expected. If this pace of domestic chip adoption continues, industry analysts project China's advanced node semiconductor output could multiply several times over within the next 5 years, a jump roughly equivalent to an entire mid-sized national economy's worth of manufacturing capacity coming online from a standing start. There is a secondary benefit worth naming too. Every phone built on domestic silicon reduces exposure to a single-point global supply chain disruption, the kind that shut down production lines worldwide for months during recent chip shortages. And industry estimates suggest a fully diversified supply base could cut a manufacturer's shortage-related losses by well over half in a future disruption event. But turning a promising technology into a global standard is a long road, and it is important to be honest about where that road gets genuinely difficult. First, yield rates on SMIC's advanced node reportedly still trail TSMC's equivalent processes by a meaningful margin, meaning more chips fail quality control per batch, which raises the effective cost per working unit. Second, the absence of extreme ultraviolet lithography access means every future generational leap requires more engineering workarounds than competitors need, a tax on ingenuity that compounds with each new chip cycle. Third, production costs on the domestic node reportedly run higher than equivalent Taiwanese manufacturing, a gap analysts estimate at up to 40% per wafer, squeezing profit margins that Huawei has so far absorbed rather than passed on to consumers. Fourth, scaling beyond flagship phones into the broader electronics ecosystem, laptops, industrial equipment, automotive chips will require production volumes. SMIC has not yet demonstrated it can sustainably deliver. Fifth, talent remains a genuine bottleneck. Training enough advanced lithography engineers domestically takes years, not quarters, and universities across China are only now scaling programs to match demand. The industry did not expect to need this quickly. Sixth, capital equipment for even the workaround processes still depends partly on components sourced internationally, meaning full independence remains a target still years away rather than an accomplished fact. Here is the part that puts everything into perspective. None of these challenges change what the engineering shows is possible. They define the gap between what is technically achievable and what will actually happen at scale. Closing that gap is an investment problem, a policy problem, and a coordination problem as much as a manufacturing one. The researchers who published this work gave the world a tool. Whether the world picks it up at the speed the industry demands is a different question entirely. And that question is exactly where the real story stops being about one phone and starts being about something much bigger. The story of Huawei's chip comeback is ultimately the story of what human civilization can build and where it can build it, even after being told the door is closed. For decades, the most advanced computing power on Earth flowed almost exclusively from a handful of facilities in Taiwan, South Korea, and the United States, a concentration so extreme that a single natural disaster or political disruption in one small region could ripple through nearly every phone, car, and hospital device on the planet. Huawei and SMIC's breakthrough does not erase that concentration, but it proves, for the first time at real commercial scale, that a second path exists. That matters most for regions across Southeast Asia, Africa, and Latin America, whose access to premium technology has always depended on decisions made in boardrooms thousands of miles away. What is genuinely new here, not incrementally better but categorically different, is a fully domestic advanced chip built without the single most guarded manufacturing tool in the entire industry. That is not a minor improvement. It is a different category of solution, one built by refining what was already in the room, rather than waiting for permission to enter a new one. The researchers and engineers who made this happen gave the world a working proof of concept. Whether the world builds on it at the speed global supply chains now demand is a separate question, one that belongs to policymakers, investors, and manufacturers as much as it belongs to scientists. That is new. And because chip manufacturing compounds the way almost nothing else in engineering does, every improvement here echoes forward into every laptop, car, hospital scanner, and satellite that will eventually run on whatever comes next. If a workaround chip built without extreme ultraviolet tools can already outsell the most beloved phone on Earth in its home market, it raises an obvious next question. What happens when the constraint disappears entirely, and Chinese engineers stop working around a limitation and start designing past it completely? That is the subject of our next video, on Huawei's newest chip and the claim that it just made Moore's Law itself obsolete. 53% more transistors packed into the exact same physical space. The link is in the description. Hit that like button and subscribe so you never miss what comes next. Turn on notifications. We publish every week. Now, I want to hear from you in the comments. Do you think export restrictions ultimately slowed China's chip industry down? Or did they force it to build something better than it ever would have on its own?